Break in market structure, BMS. In order to understand what a break in market structure looks like, we have to understand first what an engulfing candle of a certain level looks like and what it really means. Okay, so majorly there are two types of engulfings. We have the bullish engulfing and the bearish engulfing, as you can see on the screen. The bullish engulfing is when the body of an up candle, which is a bullish candle, completely engulfs, which means completely covers either the body of its superior candle or a certain resistance level, such as the example on the screen. You can see right here, we have a bearish candle previously, and we have a bullish candle which goes up and engulfs the whole body of the previous candle. This is what a bullish engulfing candle is. And the second one is the bearish engulfing candle, which is when the body of a down candle, a bearish candle, completely engulfs, completely covers either the body of its prior candle or its certain support level. This is what a bearish engulfing candle means. Now, when we talk about engulfings, it's not compulsory the previous candle has to be bullish or bearish. Whatever color it is, you just need to understand the concept behind engulfing, which is the fact that the body of the new candle or the new candle must completely engulf the previous candle. That is the idea behind engulfings as a whole. Now, I want you to understand something. Now that we've established a basic idea, a basic understanding into what engulfing are, now let's really dive right into speaking about what a break in market structure is. Okay, now I want you to understand something. A break in market structure is a very, very simple approach which helps you in depicting when a violation of a trend has occurred and hence leading into a break in market structure. Now, all that means, all the jargons we just said, what it basically means is if price is moving in an uptrend, okay, for us to understand if the uptrend is no longer valid, we need to see a break in structure. This gives us an insight into every single thing we've talked about previously. Every single thing in the sense of the swing points, the regions we spoke about, the trend direction, and the likes. Now that we have this diagram on the screen, remember we said previously this is a higher high and this is a higher low. This is a higher high and this is a higher low. This is a higher high and this is a higher low. Then we have a higher high. After a higher high, what are we expecting? We are expecting a higher low, right? But we never got a higher low. What did we get? We had a low which took out the previous higher low. We have a low which took out the previous higher low. Then we now have a new high which was not higher than the previous high. This helps us understand that this is a lower high. Okay, this is a lower high form. This is giving us an insight into the perspective that market structure has broken. Market structure has shifted from a bullish scenario to a bearish scenario. This is the whole concept behind what a market structure is. And for a valid market structure break, you must see a engulfing candle which breaks the previous higher low point, the previous swing low point, okay, to give us an insight into the fact, into the perspective that market structure has shifted. Now, you might be wondering, this scenario is only for the bullish to bearish scenario. For a bearish to bullish scenario, all we just need to do is to flip our charts, and you can see right here, okay, you can see it right there. We have breaking market structure. As you can see, we have a bearish trend, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Then all of a sudden we had a big move to the upside, which takes out the previous lower high. Breaking this region, it gives us an insight into the fact that we have a what? A higher low formed. Okay, we already have a higher low formed. Since this low is not lower than this low, we have a higher low formed, and we have price moving upward, which makes this a higher high and make this a higher low. That is just the concept, the idea behind a break in market structure. Now, we'll still go into the charts fully and understand this, but I want you to understand something as a trader. The essence of market structure, or in the end, okay, The trend, what we spoke about firstly, which is trend, the trend is the establishment of all of this. If there is no trend, we can't have a break in market structure. Okay, so it's important for you as a trader to keep an eye out on the trend, because the trend is your friend until it isn't anymore. Once you understand it's still an uptrend, look for buying opportunities. Once it has shifted from an uptrend to a downtrend, stop looking for buying opportunities and start looking for selling opportunities. Always use the trend to your advantage. This way, you would make a lot of money both ways, be it buying or selling, and you'll be able to spot opportunities when they build up in the market. Now, let's dive right into charts to see all of these things clearly. Okay, so we'll be seeing all of these things clearly, a break in market structure, how it is occurring, so on and so forth. Okay, so we'll be looking at the direction of price. Okay, we want to understand this from the perspective of direction in price. Okay, so we'll be looking at this piece of price action. Okay, this piece of price action we have on the screen. Now, what can you notice? You can basically notice that we were in a downtrend. This is a high, this is a what? Lower high. This is a lower, sorry, this is a lower low, and this is a lower high. This is a lower low, this is a lower high, this is a lower low. And all of a sudden, we had a big move to the upside. We broke this previous high region, okay? This previous lower high. And we never came down to take out this low, okay? We never came down to trade below this low. This gives us a sense that this is a high, and this is a what? A higher low. This is a higher high, and this is a higher low. This is a higher high, and this is a higher low. This is a higher high, and this is a higher low. Then what happened after? Okay, what happened after? We had a higher high in price, but we couldn't go higher anymore. We went lower and we took out this previous low. This gives us an insight into the fact that the higher low we had has broken and structure has shifted from bullish to bearish. Now we are in a bearish scenario. This gives us an insight to the fact that we have a high and we have a what? Lower low here. A lower high here, a lower low here, a lower high here, a lower low here. That is just the insight into what market structure is all about and what a break in market structure is. So I best believe every single thing we spoke about in this section, which is market structure and swing points, we've all been able to learn a thing from or two from it. And the most major thing you need to do is to practice, okay? Practice makes perfect. That is why you have the community there to keep you on guard and always with all of these things. So catch you in the next phase. Good luck and good trading.